Hello, welcome to Late Night Stocks. Market is bleeding. S&P 500 is down, Nasdaq is getting crashed, oil is above $100 a barrel, and Iran war is going nowhere. Even Bill Ackman said that even Bill Ackman came out override and said stocks are at extremely cheap prices. He is channeling Buffett, be greedy when others are fearful. Are you getting greedy when others are fearful? Maybe he's not wrong. I mean, I find some interesting stocks. Uh, at the moment, nobody is listening because they are fearful because Trump is weighing on even more on military escalation in Iran. So today we are building a watch list, five stocks I think to own this environment, energy, tech, and one recovery play. So let's go. Before I start, I want to check the market quickly. If you look at the CNBC, we had power talk today. Power sees inflation outlook in check. No need to hike rates because of an oil shock. So market is they are eased a bit on this news. And what to watch this week is that after Powell talk today, we have some jobs opening coming on Tuesday, and then we have the unemployment rate coming on Friday. Although on Friday the stock market is closed, we have this data is coming up, and lately, I mean, if you look at the data, we had the GDP. GDP is not going well. We were expecting 1.4%, and we actually got 0.7%. We are in weak here for the growth. If you look at the JOLTS opening numbers, the job openings numbers, they are decreasing since 2022. They were at 10 million, and job openings now decreased to 6 million. So markets are a bit not like the fundamentals, the overall picture doesn't look good, but this crash can bring some opportunity to some stocks. So let's start with the indices. All right. So if you look at the Nasdaq after this crash in 2025 from February to March, uh, we hit the highs in October, and since then we are in this sideways. And afterwards, after this conflict in Middle East, now we had eventually had this crash. Now we are at this exactly 15 weeks moving, like simple moving average. I like last week when I was talking here, I said we are below 200 days moving average. It is a dangerous point, and we couldn't pass that, so we were rejected at 200 days simple moving average, and that's why I was expecting further going down, and we did it. Now we're at this 15 week simple moving average, which I like. It was carrying the market very long time. As you see, when this 15-week moving average passed, then we had a huge bull run, and since then we are above it. Since April 2023, we are above this, and I think it can be a good time for this bounce back. And we don't know if there's a bounce back. I don't know if we go to new to all-time highs. Maybe we can do a lower high then crash back, but I think it's an overextension, and these places will be a good opportunity to buy some stocks. I did market research, and I found some interesting stocks that are less affected from this conflict in Middle East. And yeah, we will go one by one. And at the end, I can also have a look at your stocks. If you write in the chat the ticker symbols, then I can check the stocks for you. We can make a quick fundamental analysis and technical analysis together. All right. So the both Nasdaq and S&P 500 dropped, and they are at the same levels. And the VIX index, the volatility index, are also getting and higher and higher. This we hit the dip in the beginning of the 2026, and since then the fear volatility index getting increasing and increasing, and this trend is going higher. This means that the stock market can also go a bit lower, so we need to be careful here. But if we break this trend, then it can mean some bullish move for the stock market. The gold also found some support here. I think it's a very good in the position to buy some gold as well. And yeah, this is a good consolidation point above 200 days moving average, and we can then go eventually go higher after war conflict is lower. After oil drops, then we can see again another bullish run from gold. Silver is the same. After seeing $120, now we have just dropped to $70, almost a 50% drop. And now we are at this quarterly moving, like now we are at this moving average. I think it's a good opportunity also to buy some silver, buying at 70, selling back at 80, $85. I think it's a good opportunity. This correction will attract some buyers. But the main point is oil. If you check the oil, the crude oil is about $103, Brent is about $107, and as you see, we are going higher and higher after getting this support from 15 days moving simple moving average. It's going higher, and it is a danger for the stock market. It is a danger for the inflation, and it can hurt the markets in the long term as well. So we need to be careful here. We need to first we need to see a break in this 15 days moving average. Then it can give further relief to the markets, and also the gold and silver. So now I will continue with the stocks that I picked this week. The first one is First Solar. First Solar is America's only major solar panel manufacturer at scale. They founded in 1999, headquartered in Arizona, and they make this thin film solar modules. These are fundamentally different technology from Chinese ones, and this distinction matters enormously because their US manufacturing footprint makes them largely immune to the import tariffs, and that's why they have this advantage. And they serve to utilities, independent power producers, large corporations, and so on. And the stock is now down 2% today and 30% year to date. If you look at the fundamentals, they are at $20 billion market cap, only 13 PE ratio. Like for a value play, I see it very good. If you check the further fundamentals, as you see for revenue, their revenue was $3 billion in 2021, and now $5.2 billion in 2025. So they are increasing their revenues, and they have very good net margins at 30%. Also, quarterly, they also grow around 10%. They have 30% net profit margins, and they're a very good play, in my opinion. And if we look at the forecasts, what forecasts? So analysts' price forecasts are ranging from 150 to 300, and the average analyst price target is 250. So it is like 35% above from here, another 35% upside potential. If you look at the earnings expectations yearly, so right now they are getting like around $14 per share, earnings per share, and they're expected to increase it to $29 by 2028. So doubling it in 2-3 years. I think it's a very strong forecast. Same for the revenue. They are getting now $5.2 billion in revenue, and in 2028 They are expected to get 6.65 billion, and it looks solid. If we go back to financials again, the cash flow, they have very low debt, $650 million debt, and $2.8 billion in cash. So this is very important, and they are continuing their growth. Their capacity was 14 gigawatts in 2025, and they projected 17.7 gigawatts in 2027, and they will continue increasing their capacity. I think it's a solid pick. Let's check quickly the chart for the First Solar, ticker symbol FSLR. Here we go. So here is the daily chart. The stock price was actually stock has seen like $300 in June 2024. Afterwards, we had some crash, and in April 2025, we have seen $120 and jump back to 280. So the stock made 2x in 8 months and got back to 185. And as you remember, the stock analysts were expecting like $250-$60, like 30-35% from here. I think it's a reasonable point, and if it goes to all-time highs, then we have like a 50% upside potential. And I think these levels, this 15 months average and so on, they will hold well, and in the long term this will bring growth and more earnings for the First Solar stock. All right, so this was the first stock I want to talk about. They have very low debt, high growth, and profit margins. I think it's a solid play when the oil is $100. Next I want to talk about Argan, ticker symbol AGX. So Argan is a specialist engineering, procurement, and construction company for almost entirely on the power generation market. They build power plants, both natural gas and renewable, and basically like they built this plants in United States, but they also operate in Ireland and UK. If you look at some other news, I see their revenue was 944 million this year, and they have a very big project backlog, $2.9 billion project backlog. That means that is like 3x their annual revenue. So it's a big backlog, and this means that they can continue growing in this high uncertainty environment. The stock is down 7.5% today, but it is up 65% year to date. It is in a very good trend. And if you look at the fundamentals, they are at $7.3 billion market cap. They have a bit of high PE right now, 42, and they give 0.35 dividend yield. As you see, their revenue grows steadily. So they almost doubled their revenue from 500 million to 944 million in 4 years. And if you look at the profit margins, they have around 15 to 18 net profit margins, which is really good. They have zero debt and very high cash flow. As you see, they have like $400 million in cash equivalents and always a free cash flow, no debt. That makes them also very resilient in this high interest markets. So that is what we can say for the AGX, a power builder with zero debt. Let's check the AGX chart quickly, and what can we say technically. So AGX actually jumped very high after the earnings. They beat the earnings heavily, especially on the earnings side. As you see, they beat the earnings 75% by 75%, and stock jumped from $400 to $562. So almost like a 25%, more than maybe 30% up last Friday. And especially if you consider the market crash on Thursday and Friday, the fact that the stock jumped this high is a very strong signal. And maybe it dropped because some profit takings. I think it's worth closely worth watching this stock. As you see, the stock is going higher, higher, and higher in a very steady growth. If you look at the forecasts for the stock, the analysts are not so bullish. I think they're a bit overvalued. The average analyst price target is at $450, and yeah, I mean, if you look at the expected earnings per share, they got $9 per share. They reported $9.7 per share. It is expected that they will reach $16 earnings per share. It's a 50% growth in 3 years. And for the revenue, as you see, this steady growth, which is expected to go higher, higher, and higher. Today they are reported $940 million, and they are expected to go to $1.8 billion revenue. If go if you considering that there will be more constructions for the power plants and renewables in the US to lower the ties with other countries in the Europe or in Asia, I think this local company will have increased backlogs in their projects, and they will generate steady growth. We need to be careful with the valuation. If there is a further drop, maybe it would be nice to jump in and see where it goes. So that was it for the AGX. If you have any questions, please write in the chat. If you have a ticker request, you can also mention in the chat. I will check these ticker requests at the end of the live stream. We will check both fundamentals and the technicals, and I will give you my own opinion. So that was the second stock, Argan, ticker symbol AGX. The next stock I want to talk about is NextEra. So NextEra Energy, actually I talked about it last week. It is the world's largest producer of wind and solar energy. If you want one name that is backbone of the US energy transition, it is NextEra. They operate Florida Power and Light, and a massive renewable business with 30 gigawatt backlog. And they reported very well lately. The stock is up 15%. The stock is up 15% year to date. They are at $200 billion market cap, so it's like a mega cap stock, but at a reasonable PE ratio with 27 PE ratio. They give 2.7% dividend yields, and they have a very high net profit margins. They are basically like a utility provider. They will keep these high net margins at around 25-30%, and they have a high debt, but this high debt is due to their investments. If we look at the forecast for the stock, so we have the average forecast is at 95, and the max was at $111. So around 20% up from here. If you look at the revenue forecast, if you look at the EPS, earnings per share forecast, now we're at 3.7, and we are expected to go 4.7 in 3 years. And if you check the revenues, now we are at $27 billion in revenue, and we are expected to go to $36 billion, which is very high. And this can bring also a steady growth and low risk if you consider this high volatility environment. I talked about NextEra last week. I am talking it again. This stock I like. And yeah, if you look at the chart itself for the NextEra, as you see, like on Thursday and on Friday, we had a huge drop in the stock market, but the stock did not do anything. So there were buyers, they were holding it very good. For example, let's check it together. As you see, last 2 days, Nasdaq dropped heavily. NextEra, steady. So this is a strength for the stock. It can be a bit, overextended, but I mean, if you are looking for a safe play in an energy environment with high net profit margins, with renewable energy, I think it's a good choice in my opinion. Alright, that was the third stock I want to talk about. Next is IDACORP. IDACORP is another renewable energy company. One of my favorite boring stocks. So IDACORP holding company for Idaho Power. Their fuel is water. They have 17 hydropower plants. So when oil hits $100, their fuel costs do not move. Like they don't affected by it. That's why the stock is up 2% today and up 13% year to date. It's a good alternative due to their hydropower plants. They can easily, continue in this, continue with the news, of conflict in Middle East. So this hydropower plant, IDACORP, has $8 billion market cap. They are at 23 PE ratio, which is reasonable, and they give 2.5% dividend yield, which is also good. If you look at the revenue, their revenue doesn't grow much. I mean, compared to 4 years ago, at $1.46 billion revenue, now they are at $1.8 billion revenue. It's like 30% in 4 years, which is okay, but they have very high profit margins. As you see, they had 17% net profit margin, which is very good. And if the energy prices goes higher, they will have a higher profit. If we look at the forecasts, average analyst price target is at 147, which is only 2% up from here, and maximum is at 160. The EPS expected to grow in the next years. Now we are now at 5.9, and in 3 years we want to be at $7.5 per share. It gives confidence to see these forecasts. Same for the revenue. We are now at $1.8 billion, and we are aiming 2.4 in 2028. Although they slightly missed their earnings, they have a very good EPS streak. Basically, in 18 years in a row, you don't see the here, but they made their EPS higher and higher and higher. They always grew their EPS, and it's a solid company with a good track record. If you look at the stock price, as you see, since July 2024, the stock is in a very high, like in a very good bullish trend. Uh, they they made like 50% in 1.5 years, and I think it's a good company for the long term, and their hydropower energy will stay relevant and will pay its dividends. And one more thing is that their capital expenditures, they want to invest further $1.5 billion in 2026, and but their core business is consistent, and it's a safe play in this environment, I think. All right, that was the fourth stock I want to talk about, IDACORP, ticker symbol IDA. Next stock I want to talk about is Google. I will not describe you Google, you all know Google, but I checked I checked Magnificent Seven. So basically, if you look at the Magnificent Seven, like Google is here after making this huge bull run from 170 to $340. Basically, it Google made a 2x in 6 months, basically, and it is normal to see this like consolidation after making 2x in 6 months. It's a huge move for Google considering its market cap. We are still above the 200 days moving average. That's why I'm still bullish. If we see below 260, like 260, 265, I think it would be nice entry point. Not all in, but the first entry point. And as you see, like if even if it goes to 240, I think like first entry at 260 and then the second entry at 240 would be nice. So let's see. Let's see how it goes. If you look at the fundamentals, like Google is at 25p, which is reasonable, and they have a very good profit margins. I mean, looking at the profit margins, they have like 30% net margin. They make $400 billion in revenue and $130 billion net income. They have a huge cash, and I think they were successful with Gemini, and they have a lot of. They are providing lots of good tools with Gemini, and among let's say ChatGPT, Cloud, and Gemini, these are the top three in my opinion. Like Copilot of Microsoft, it is not that good. I would like rank like Claude and then ChatGPT and Gemini racing, and they have a very good data. Like Google is gathering data for years and years, and they can use this data to strengthen the Gemini, and I think it is very good opportunity to buy when Google corrected like 20%. You see, it came back 20% here, and it's a good deal in my opinion. I will closely watch Google. So that was the fifth stock I want to mention. Next stock is a different one. It's about travel. It is Booking Holdings. So after so Booking holdings, booking is down 23% year to date. After the conflict in Middle East, we had seen a huge correction in the stock, which is normal. Maybe we will have a lower travel volume because of the security concerns. But I mean, booking is like Nvidia of travel, right? They have the biggest. They are the biggest, and people always go to booking to book rooms, and it will be always like that. If you look at the stocks, you can understand it better. As you see, booking holdings was at, like, let's say at 2000, and then it made like a 3x in 2.5 years. And after seeing these levels in July 2025, it made a huge correction. So from all-time high, we made a 30% correction. And now we are seeing this double bottom pattern. After seeing this huge shock, then we made a bounce back, and then we are going down again. And I think after some consolidation here, we may see again a further, yeah, bullish trend. After the conflict in Middle East eases, then we may see further buy to this stock. The reason saying this is that, like, if you look at the fundamentals, they are at $130 billion market cap, and they have 25 P ratio, which is reasonable, and they give 1% dividend yield, which is really good. And if you look at the revenue growth, they are growing very steadily. Like, they had $10 billion in revenue 4 years ago. Now they have $26 billion in revenue. So 2.5x revenue in 4 years, and their net margin is 20%. So they just made $5 billion profit in 2025, and they will keep doing it. They have $17 billion in cash, so they are very safe in this high interest environment. If you look at the forecast, the analysts are very bullish. Like, average price analysts at 5,800, so it is like 41% upside potential. This is what analysts are saying. They are like it, which is very solid. And for the EPS growth, we are expected to see further EPS growth, like 50% EPS growth in 3 years. Same for the revenue, from 26 billion to 35 billion in 2028. This will continue. I mean, they will keep this. They will keep being the best in this booking industry, and I think it's a safe play. After we see this 30% correction, I think, yeah, you should definitely watch this stock. So yeah, that was the 5 stocks I wanted to talk about. If I see any ticker requests from the viewers, I can also talk about them, and then we can close the stock market live stream. Thank you for the participation and putting your comments. And I don't see any ticker requests. If you watch this as a YouTube video, then please put your comments, put your ticker requests as well there. Then I can also check them in the next live stream. I will continue giving updates also via shorts. Please subscribe to our channel. Don't forget to like the videos. It is very helpful for the channel. So stay tuned for the next live streams.